Hey everyone, hope you're doing well. Hope you're having a great day. Hope all is well. Hope you guys enjoyed my video about life insurance, universal life insurance, and term life insurance specifically. In this video, I wanted to talk about something very, very interesting, and it's about my main investors, or basically people who actually want to get into the market and they have a lot of money and they've basically over contributed, or they're in the process of basically almost over contributing to all their investments, because each investment in some parts of the world, there is a specific amount of money that you can put into a certain amount of asset classes. So for example, in Canada, they have RSPs, TFSAs. In America, they have IRAs, and there's a specific amount of money that you can put into those investments. Now, with something called, like I said in my previous video, universal life insurance, this actually opens up contribution room. So if you have maxed out all your investment accounts, you can actually use a universal life insurance to open up more room. And this is actually beneficial because even if you're getting more insurance, which is actually beneficial too, because it can protect you from your estate, which I said in my previous videos, it can actually help you have a more investments, a bigger investment account. So for example, if you buy a certain amount of life insurance, you can actually open up more contribution to invest more money into the universal life plan, which is tax sheltered, meaning you don't have to pay taxes on all the gains that are being held with inside the plan. So this is a very important concept because it allows you to save money tax efficiently and tax sheltered. Now, the good thing with this is once you build up a certain amount of money in the universal life insurance plan, you can actually take out a credit or a credit line from the plan on, usually it's around 80% of the value of the plan. So let's say you've built up a significant or amount of money, you can borrow up to at least, from what I've seen, 80%, and you can actually use that for other things, like other types of investments. The really interesting thing here is when you borrow money from the plan, the interest that you actually have to pay on the debt that you borrowed from the plan is tax deductible in some countries. I know that in Canada, you can actually do that, where you can actually borrow money and then you can actually invest it, and the interest that you borrowed from basically the money that you got from is tax deductible from your income. So that's a very, very interesting, it's a very interesting thing to use when you're actually investing. And the good thing is, the more that you build up, you can actually use money from the plan as credit. So you don't really have to go to other credit card companies and borrow money. You can actually use your own money as a credit line. And usually once you establish good investments with the company, they usually give you a good interest rate. It's usually prime rate plus the company's rate. So you can always compare to if your credit card interest rate is more or less than the insurance company's interest rate. So you can actually compare. It really depends on your credit card that you have with the other banks or other companies, and how well you establish their credit. That determines the interest rate they're going to be giving you. But for the purpose of this video, I'm just explaining that you have options when you have a universal life insurance plan and you've actually built up your funds over time. You can actually use it as more contribution room, so you have more money to invest, so you don't get taxed once you reach the threshold of putting too much money into the plan. And you can also leverage money out. You can borrow money out to actually invest in other things or for your personal needs at a good interest rate. So, and also it's tax deductible from your income when you're actually doing that strategy of investing. So I hope you guys learned a lot. I know it's a little bit complex, but it is very, very interesting for the sophisticated investors and people who actually want to do this, or for people who have way too much money in the bank or in their other investment vehicles, and they need another source to put their money in so they don't get taxed so heavily, and maybe they've reached their threshold and they want to invest in another type of account. that allows them to save and make money tax efficiently and tax sheltered. So I hope you guys learned a lot in this video. Let's get this to 1,000 subscribers by this week. Make sure to like if you guys enjoyed the content. I'd like to hear your comments down below on what videos I should be making next or what you want to learn more about. So thank you for watching this video, and I'll see you in the next one. Take care.